Hey everybody, welcome back to another episode of Real Estate and Refreshments. This is episodes 3. The loaded question of the day and of the month and everything, especially with this year, is where are we headed and where do you see the new norm of interest rates in next 3, 6, 12 months?
Yeah, it's tough, and because I have all of my clients contacting me right now and asking the exact same question, and you can only say what you know to the best of your knowledge. I can't predict what's going to happen. I give my clients 3 options. A lot of my clients are saying, "Hey, I had 1.45 on my mortgage, 6 months ago. Now I'm at 3.45, 4.45. This is kind of freaky. What should I do?" And I give them 3 options. I say, you're at 4.45 now. We might see another rate increase in the next couple of weeks here. So that variable rate's going to become 4.95. You can stick it out. You can see where things are going to go with rates, and hopefully they come back down. You can lock into a fixed rate if you're looking for peace of mind, which 3 or 4 of my clients have said, yeah, this is too much stress for me. I'm okay with locking in at 5% for 5 years. My payment's going to be set. That would make me feel way better. Some clients are opting to go with a 2 or 3 year term. That's locked in. It's going to be around 5% as well. It's going to give them a little peace of mind for 2 years and hope they time their renewal on the downturn in rates. So that's kind of the ballpark we're playing with. We're saying, here's your 3 options. I'm hoping that these, the government's increased rates 3% this year. That's massive, and it sucks for everybody, myself included. Hopefully the effects of these rate increases come into play pretty quick here. Inflation kind of slows down. The big reason they increase rates, and it's kind of cruel, is that they want people's budgets to tighten up so they stop buying stuff, right? Inflation is caused by supply and demand. COVID caused all these supply chain issues. So, demand outweighed supply, so the price of goods increased. And that's going to start tapering off because people have less money to spend. That's the goal here. And my hope, and a lot of people I speak to in my industry hope, that 12, 18, 24 months from now, we'll see rates coming back down. So a lot of my variable rate clients have decided to stick it out and hope that in, 18 months, they're back down to 2% and they're laughing.
Right.
Whereas the ones who lock into a 5% fixed rate, they might have FOMO about rates going back down, but they decided that the peace of mind was worth it. And
that's their safety net, yeah.
Yeah, and that's what I say. I can't tell you what to do. And I tell everyone, all my mortgages are variable, which has ruined my cash flow. But I'm toughing it out. And I'm hoping that in 2024, I will be like, yes, I'm glad I did that.
That's right.
The COVID-fueled inflation should be dying off soon, and things will get better for our economy, and inflation will slow down, and then we'll see rates come back down. So I'm hoping that we never get above, when I first started doing mortgages, I was giving out 5.5%, 6% for rates. We're at about 5. We're in the low 5s to mid 5s right now for fixed rates. Variable rates are mid 4s to 5s for now. I'm hoping that we're nearing the peak.
Yep.
And things will come back down and normalize, 3-4%.
Yeah.
The good thing is we're not at 12. Like our parents went through that.
Yeah,
right? 18,
19, back when we were born. Yeah, like it's crazy to hear all those stories. And it was a good reference point to where in our professions when we started, my first one was around 5 something. And you see all this stuff at 1 point or 2 point something, and I'm like, well, that's amazing. Get in when you can, but just don't over leverage yourself. And the stress tests definitely help with that. That was the one smart thing that was implemented.
Yeah, it was
implemented. Sorry, and then it'll last a little while because now you're sitting on numbers where, when things go bad, not if things go bad, when things go bad or rates go up, let's call it, that you can afford this place, and you're not just at that bubble of like 80-90%, like barely hanging on, nose over the water kind of situation.
Yeah.
And I think that's helped a lot of people because you look back at the other, downturns, recessions, crises, whatever you want to call it. A lot of people were in way over their head. 0 down, shouldn't have got the mortgage, crazy numbers, mortgage fraud, all this other stuff. We don't have that anymore. And coming out of this, you're going to see a lot less bank sales, foreclosures, judicial sales, all that stuff, because a lot of people have already figured out their top end numbers and they're working within that, and they're budgeting more accurately. And a lot of those people that have been through those times don't want to go through that again. So they know that, hey, this is a red flag for me. This is bringing up like war wounds, and I'm going to be a lot more careful and cautious when I am signing up something. You know, maybe I'm buying at 5 and not 7, because in the next couple of years, you know, I want to be comfortable and happy and enjoying my life.
Right. And credit to the Canadian government, because when the mortgage crisis happened in the US in 2008, we didn't have those same loans. We didn't give out those loans where you had no job, you just signed.
Yeah.
So our government has always regulated mortgages a little better than the American government. So after that crisis in the US happened, I got that question all the time. Like, what if that happens in Canada? And I always say, no, we have rules in place. You need a job to get a mortgage. You need this and this. You need a job, or you need equity, or you need net worth. You need a way to pay that mortgage to get a mortgage in Canada.
Proof of it,
And it's only got tighter and tighter and tighter. So as rates are going up, people are almost hitting that stress test rate where the government said you need to be able to forge a mortgage at 5.25 to get a mortgage at 1.45. They're almost getting there. And unfortunately, they have to show that they can still afford that.
Totally.
But everyone's like, yeah, I guess they tested my stress, and I can do it.
Yeah.
And most people in Canada, Calgary, they pay their mortgage.
Yeah.
So delinquencies are low.
They're very low.
We're still strong.
Yeah. I'm putting out a chart that I'm sending out to my mailer this month, and it's like crazy low, well under 1% of delinquent payments right now. Like we're showing, which is incredible for what's happened in the last couple months and what's probably going to happen. So it just shows people are ready for it, and
they have pride in their mortgage. They own a home, and they're going to take pride in paying that mortgage. And they're like, I picked the variable rate. I saved a ton of money for a couple of years.
Yeah.
So there's a plus. But now it's getting more expensive, but I'm still going to pay that mortgage. I'm going to, cut out a few more expenses. I'm going to stop consuming as the government wants me to make sure I pay my mortgage. And then we all work together, and inflation will come back down, and then we'll be living the good life again.
Yeah.
Allegedly. That's the dream.
So yeah, all in all, it'll get to 5, right? 4.95, 5 and change or something. It's not the end of the world. We lived through it years ago. People got through. People still made a ton in real estate long term. So go with it. It sucks for now. It's going to be better later, kind of thing. So,
but talk to the experts and survive these rate environments, and then take advantage of the low rate environment.
Yeah.
So when we go back down to 2%, which could happen in the next 10 years, let's buy some properties.
Yeah, or even the next couple months to the next couple of years. If there's buying opportunity below historic lows for price or value, jump on it.
Yeah.
Even if you have to sign up at 4, 5, or 5, you know that the increase in value over the next couple of years is going to supersede your extra $20, $30 you have to pay, kind of thing, for securing that property. So,
exactly.
Yeah.
Owning a property is worthwhile regardless of the cash flow implications or the mortgage payment, in my opinion.
Yeah. Because you see the future gain of it all, right?
Yeah. And you have so many options. You can sell. Our market's always strong in Calgary. You can sell it. You can rent it long term. You can rent it short term.
Yeah. Rent and hold if worst case scenario, right?